We're going to take a look at 6 charts here from Deutsche Bank about the Canadian housing market. And before I get into these graphs and tables and charts, I'll just say that this doesn't look like it's going to end too well. So first we have this first image showing that Canada's housing market is 63% overvalued relative to its historical average. Now you see here that Canada's beating out New Zealand, Belgium, and Australia as far as how overvalued their housing market is. Now let's take a look over at this second bar graph showing that home prices in Vancouver, British Columbia are actually more expensive than they are in Sydney, Australia, London, England, and even New York. Now, being from the United States, New York is pretty infamous for having just an insane housing market, so I thought that was pretty shocking. But let's move on to number 3, this third graph here showing that, well, Canada's in some pretty serious trouble because its households never deleveraged from the 2007-2008 subprime mortgage crisis, and the United States, I think, experienced that shock a little bit worse than Canada did. But as you can see, this graph's pretty scary, and it looks like the Canadians are really in for it there. Now let's move on to this fourth image here showing that since 2000, growth in assets held by Canadian banks is as follows. So personal lines of credit at 650%, credit card loans at 400%, mortgages at 250%, disposable income at 100%. So it's not only the housing market that is worrying Canada, according to this data here from Deutsche Bank. And we have here this fifth graph showing that in Canada, multifamily construction is at record highs. So again, very indicative of a housing bubble, and it looks pretty scary when you see the detachment. Up in 2002, you see a pretty big detachment from multifamily housing to detached just detached housing. So looking like a bubble here. I don't know if it's hedge funds buying these things up or what. But let's move to this last graph showing that Canadian workers are twice as reliant on housing construction. So 7% of Canadian workers work in housing construction, which is double the share of that in the United States. So it's looking like some pretty irrational exuberance over in Canada. And in conclusion, we'll just say this. The Canadian housing market, well, it's really expensive. Median house price to median household income is higher in Vancouver than it is in Sydney, London, and New York. Canadian households, unlike their U.S. counterparts, never deleveraged after their financial crisis, and credit is growing in Canada a lot faster than their income is. So there's a lot of supply coming onto the market as well, and the share of Canadian workers in housing construction is twice that it is in the U.S. So there's a little recap of those 6 charts there, and lastly, I'll leave it at this, that if rates rise or if commodity prices continue to fall, then it's likely that Canada's housing market will come under some serious pressure.